the informed investor, thanks to Century 21 agents, defying mediocrity and delivering extraordinary experiences.
We're lucky on a Monday night to have Charles Tarbey, Chairman of Century 21, on, and I do note that they're running some very interesting advertisements across our network. Mr. Tarbey, good evening.
Well, we are, Steve, and we're trying to get... I was just saying to Thomas earlier on, one of your producers there, that I had to switch over to House Rules tonight. Sorry about that. I know it's Channel 7, but we're also the main agents behind that show this year. So it's just been interesting to watch. It's great to get the brand and the message out there for all of the hardworking agents in C21.
Given that we are in an election campaign where the changes to real estate, particularly through negative gearing, is going to be such a central part of the discussion, it's a good time to be getting good advice from a good agent, isn't it?
Thank you. Yeah, well, that's very kind of you. I think it is too, Stephen. The market's changed to such a degree now that when you talk about agents, you're talking about the real estate agents nowadays, not ones that come into the industry during the boom. You're talking about agents that you really need right now, those that know how to negotiate a transaction on behalf of a seller and make sure that the buyer and the seller are satisfied. That's an art form that's been lost or gets lost in a boom because people rush in at auction. There's fear of missing out. It's a matter of who yells out the most dollars during an auction, generally not down to an agent's expertise. So the marketplace we're in right now is really about real estate agents and their expertise.
I saw your Century 21 office in Port Douglas the other day.
Oh, my gosh. Okay. Have we written that one yet with the new logo? Or is running a bit behind?
I think a little bit behind, but it looked like a very good franchise to be running, I would have thought. Can I ask you, just on all of this stuff, we've got an election now in 12 days' time. If you were to go out this week and buy an investment property, now obviously Bill Shorten's changing the negative gearing legislation, and he's only going to allow it on brand new properties. Would I still have time to go and buy an existing property and negatively gear it, or would the amount of time for settlement knock me out of the game?
No, I think you've still got plenty of time. But the one missing thing in all of this, Steve, is that whether you buy an established property now and negative gearing is grandfathered, or whether you buy a new home next year, the moment that property gets into your hands, it becomes an established home. It means that it's no longer attractive for a future investor. So straight away, you're actually being penalised or discriminated against, probably a big word, but because the property you bought can't be bought by an investor and get that negative gearing, because you have to go and buy something new. So now you're in the mix with everybody else, and anybody who's an investor probably won't come anywhere near the established market unless they have to.
I note that Labor's pretty much stopped talking about it.
Yeah, they have. And they took it down their website. They made changes. I think they've realised, I do hope they have realised that when they introduced this discussion going back a year, maybe 2 or even 3 years ago, I remember having a meeting, you'll love this, with Scott Morrison and Malcolm Turnbull, myself and a handful of agents. We met with them at the time going back talking about negative gearing. And I think that at the time, and particularly over the last 36 months, there have been pretty good reason for looking at it. But now all of a sudden, with the Royal Commission of the Banking really damaging the industry to the extent where people's borrowing capacity has been diminished to some degree, that coupled with the fact that the market has itself slowed down to such a degree where it's levelling out now, there's really no reason to introduce more law into the industry or remove negative gearing from the industry and impact on housing, again, even more than it needs to have.
It's going to be very hard for them to walk away from it because the income that they've put aside next to what this negative gearing change is going to give them is all of the money that they're promising with their election promises. So they're not going to be able to walk away from it.
Steve, look, many, many years ago, negative gearing was removed by a Labor government, and within a very short space of time, it was reintroduced. I mean, it had such an incredibly negative impact on the market. Look, we think that real estate agents, obviously, whether people are buying or selling for us, it's business. But when we look at our clients, we look at our tenants, for example, if there's no investors out there wanting to buy because they are looking at it from a negative point of view, I think tenants are going to have problems because you're going to have government housing required. Government aren't that great at doing that job. And if the investors aren't in the marketplace, then tenants are going to be paying more for their rent. And this is one of the big issues that occurred going back the last time negative gearing was removed.
The Reserve Bank board meets tomorrow. I mean, it doesn't really matter much if they do bring down an interest rate cut. The banks have pretty much signalled they're not going to pass it on anyway.
Yeah, that's right. I do think that they need to do something with the interest rate, but I think the banks will probably pass on some of it if it occurs. This is what they've done before. You wonder, don't you? You've got to ask yourself the question, what's the point of having a regulator there if the regulator can't actually do anything about it in real terms? And that's been an issue in the past. Some banks have not passed on anything at all, and others have. 2, 3, 4 weeks later, people are over and are on to the next problem and they've forgotten. I think that the banks hope that happens. But given that we've just been through a Royal Commission in the banking, I wonder whether the banks would be that game.
Indeed, that's a very good point. The clearance rates have started to edge up again.
Isn't it fantastic when you look at that? I mean, there weren't as many properties going to auction. There's still a significant number compared to this time last year, certainly for Sydney. And 63.1% was last year. This year was this week was 66.6%. And even Melbourne, 60.8%. They're really strong clearance rates. Agents are telling me out there right now, it is harder, but there are a lot more buyers out there because they're sensing there's a bargain. And the more people are out there and the stock levels have dropped, that means that all of a sudden people are going to start pushing a little bit closer to buying a lot quicker than they might have. So we're seeing still a decline in price in some areas, but certainly not the way it was. There are parts of the country where the market's still moving upwards. And I think compared to the 20, 30, 40 and so-called 50% drop that we were going to get, the crash we were going to get, that certainly doesn't look anything like what we're seeing today.
Close to the bottom?
I think it's very close to the bottom. I think there's some areas that just need a change. Certainly discretionary spending areas will have a bit of a change. Yeah. But I think that most of Sydney and Melbourne have started to see the worst, Steve.
Well, you're the great predictor. We always enjoy having you on a Monday night. Thank you very much, Charles Tarbey, Chairman of Century 21. Talk to you next week.
Thank you very much, Steve.
Charles Tarbey.